if you're looking for high reward strategy that occurs every single day, then look no further because the turtle soup is one of the most rewarding trading strategies that exist and is actually very easy to execute. It's also ICT's favorite strategy. So let's waste no time and let's get started. So for those that don't know what turtle soup is, it's basically a false breakout. You are making the soup out of the turtle traders that trade the breakouts. So they enter long here, but you enter short. And when should you do that? When should you go against them? These three things are when the highest probability of turtle soup occurs. It's when you have fake double top, which is 2 equal highs, and then third push above, and then quick move down. Then it happens on previous week high or low and previous day high or low. So let's imagine that this right here is our previous day or week high. Draw the line and we can see it pushed just a little bit above and goes down. And this is most of the times what happens. You get this chop before this high and everyone is going long here because they think it's gonna break out, right? And it goes up, it takes out this and this. So everyone goes long here. The shorts got stopped out and you go short here. And the highest probability time is at the kill zones. And these are the times that are the highest probability. So London open, which is 2 a.m. And this is all of this is on all of this is on New York time. So 2 a.m. Then London kill zone ending, which is the 9:50 to 10:10 macro. New York open from 8 to 10 and end of PM macro. That's from 3 to 4 PM. So now let's go through warning signs of fake turtle soup, because you will not win always, and not every turtle soup sign is a turtle soup. So the first sign is if the opposing liquidity was already taken. Now, what does it mean? Let's imagine that this was our day's low and we took out this liquidity right here and we have this double top. We are not expecting the price to do this again. We expect the move even higher because we already took this liquidity right here, which was previously our target. Another warning sign is if we have this double top here and we break through, but we close 2 candles above. So one candle breaks through and then maybe another one breaks through again. So that's a warning sign that this turtle soup might not happen. So what you can do is wait for the 2 candles to close or not close and see from there. But you're risking entering at the worst time, and maybe like what can happen is the move can be so fast that it does this and this again, this right after on 2 candles. So if you would be waiting for the 2 candles to close, you would be entering here. So that gives you such a huge risk now. While before, if you just entered here on this break, this would be your full risk. Now, if you enter here, this would be your full risk and it's not worth anymore to trade it. So another warning sign is if 3 candles close and also leave a fair value gap behind. So imagine that you have 1 candle, second and third, and the first 2 candles just left fair value gap behind. That's also a warning sign that the turtle soup is not going to happen and it's a real breakout. And another, if we left fair value gap, we do not want to see a fast move from it away. So imagine we have a fair value gap right here and the price just does this. It goes slowly and then does this because it does not want to, or it wants to move up and it just doesn't want to wait here too long. So if the price is just too quick from fair value gap, it's a sign that this is a real breakout. Now, I did not talk about the targets. Your target is always the opposing liquidity. And it can also be the 50% of the range. So imagine this is the range. We have this low and this higher here. So your target would be 50%. And this is usually not how, like, the move would in real life look something like this. So 50% would be somewhere here, or not somewhere exactly here. So your target is short on this breakout. Your target would be 50%. And you are trying to get free R on every trade. And why? Because you're giving yourself a chance to lose. And that's fine, because with free R, you can lose so many trades and still be profitable. You can have like, is it 30%? I think 30% win rate. Let me check. Okay, so you need 25% win rate to be break even. And let me tell you, if you do things right, you will have much higher win rate. Like much higher than 25%. And also you will get like higher R. So 50% is your target, and also opposing liquidity, which would be this right here. That's also opposing liquidity. You can also maybe see something like this. So this would be also liquidity. So let me just write it all down for you, so you don't forget. Warning signs, opposing liquidity taken already. Then 2 candles close through our level, which the level does not have to be just the double top. It can be the previous day high or previous week high or low, any PD array. It can also be an order block. So imagine that this is 1 minute chart and you have higher time frame order block right here. This is 5 or 15 minutes, and you have this order block right here. Double top below that. So this is also a place where you can enter. And your stop loss is best above the order block. But if warning signs, 2 candles close through the level, you should be scared. But you will most likely be already stopped out. Then 3 candles with fair value gap and 2 fast acceleration from fair value gap. And your targets is 50% of the range and opposing liquidity. So now let me show you the trades, some example. The last banger trade on Friday that I called in my group was using this strategy. The total profit was $1,300 on just 3 contracts. And starting Monday, we will be also doing live streams. So if you want to see me trade live, you can join now. See you inside. Okay, so let's start on the daily chart. Draw your previous day high and low. Also some other highs and lows. So like this. Now you don't have to have this all on your chart at once. Like just draw the close ones to your price right now. So you have this high, slow. Now you want to go to the lower time frame and just look for other stuff that's on the chart. So we can see that we already marked out all of the stuff needed. We can see that there is this liquidity right here. Also this one. Now let's go to even lower time frame. And mark out the time. So 2 a.m. But most of you will not care about that because you are all sleeping. Then from 8 to 11. Then closing is from 3 to 4. And the macro right here from 9:50 where is it? I'm gonna delete this one. I don't care about it. So from 9:50 to 10:10. Let's make it bigger. So we wait for the price to reach our kill zone. We are in that at 8 o'clock. Now we see this low right here. And you want to be at the 15, 5, and 1 minute chart for this. On the 15 and 5 minute chart, you want to look for some PD array like order blocks and fair value guess breakers, everything like that. And on the 1 minute chart and 5 minute, you are looking for entries. So here, we can see that something like a turtle soup happened before our kill zone, but we don't care about that. Right now, we see these lows right here, this one, this one, this one, and this one, and this low right here. So we wait for the break of this low. And what you can do is just put your limit order here, set your target for this, set it for 3 to 1, and just wait, no? And you will notice this, that most of the time you will not get stopped out. And if you do, you are wrong and you can enter again somewhere else. Because look, we break this low right here, but what can happen is the price will just go here, right? And that's fine because we get stopped out here on the midway. And then we can enter again with even better entry, even a bigger target, and we are profitable just like that because the trade is 3R. So wait for the price. Okay, we can see we got filled here. Now we're targeting this. Okay. It's chopping. Now we got filled. So good first trade, right? Now we can also use this right here. So we can see an order block here, right? On the 5 minute chart. You can do the 15 minute, and there is this big order block too. I'm gonna cancel this one. I'm gonna delete these lines too because we don't need them anymore. We have new low here, and this is our order block. You can use just the smallest one or the full thing. Go to the 5 minute chart. In 1 minute. And now we are close to our macro, right? So, well, okay, like this. So we can see this wick right here. We can see these lows right here, right? And our order block, which is our point of interest and where we want to enter the trade. Because also these lows right here are very close to the order block. So your idea is to enter here, target this liquidity right here, 3R trade. And you can also look for better target like this liquidity above, right? Which would give you even bigger stop loss. So you're risking 6 handles to get 18 handles. That's pretty good. So let's see how this moves. So we got filled, and I'm not sure where. Well, we would get stop loss if we were targeting just this. But this would not be a great entry or a great stop loss because you always want to put your stop loss below an order block. So we got filled. Now it touched the 50%. And it should not get below 50% of the order block, because if it does, it's just showing you that it doesn't really want to go up again. So when we see that it holds the 50%, I am very confident that it's gonna go up. I would maybe even get more in the trade. And I forgot one thing. This is another thing. This is the 50% of the range. So this would also be your target. But it would be a bad target because, you know, this is the high we were talking about before. So you just have to, like, you know, you just have to look at the chart and see if is this really a good entry for me? Am I getting enough? Is my stop loss big enough so I don't get just stopped out for no reason? And we can also see that the price reached for this 5-minute order block, right? Just perfectly. So you could even enter on this order block, put your stop below here. And even if you were targeting just this, you would get almost 3R. This is 2.3. Oh, yeah, like 3R would be here, right? But let's see if the price reaches for our target. It's chopping. And it reached for the target. And now we are in between our zones, so we do not really want to trade here. You also don't really want to be in the trade after 11. So you could close the trade here and with like, what is the profit? Like 14 handles profit. That's just easy, just like that. And we can see another turtle soup forming. So we got equal highs, break above the high, you would short, you know, that was a late short, your stop loss. But this is outside of our zone, right? So you do not want to trade here. You do not. But let me just show the trade, okay? So short here, stop loss, your target would be this liquidity, 3R. And it even worked out, even outside of the zone. But you do not want to trade outside of the zone. This was the 130 macro, which you can maybe try to trade, but the zones I showed you are the best ones. So let's wait for the last hour, right? So what's happening here? We do not really see anything right now. So we want to wait. We have this low right here, so maybe wait for this low to be broken. Because, you know, at the moment, you have this liquidity already taken, which is the liquidity you are looking for. So you need like a big reason for entry. So we would like to see at least this low, the daily low from some day before, to break through, and then maybe look for turtle soup. Okay, so we're getting close to that. Now we break through, do not close below. This could be our entry too, just like waiting for the break only. But, you know, we did not get any equal highs or anything like that. So it's lower probability, but we break through the low of some day. So that makes it higher probability, but it's not the highest. So you could enter long here. And your target would be this liquidity. So either that or 50% of the move, which is a little bit above, so you can target that. And for a 3-hour trade, you would have to have your stop loss here. So 5 handle stop loss almost, or more than 5. Let's see how this plays out. Shopping. And you see the macro working. And exactly at 4 o'clock, we got our target. That's not a coincidence. So thank you guys for watching. If you enjoyed the video, leave a like and subscribe.